Hi, this is Matthew Cratter from Trader University, and today I want to talk about government cryptocurrencies, and I've subtitled this "A New Way for the Government to Steal from You," another example of Big Brother. If you're interested in learning how the economy and the stock market actually work and how to profit during these really unusual times, be sure to hit that subscribe button. So what's a government crypto? It's also, the formal name is a central bank digital currency. And what it is, it's the digital form of fiat money. Fiat money is just money that's not backed by any hard assets. The US dollar used to be backed by gold. You could actually redeem it for gold. Now it's just pieces of paper, or it's zeros and ones on your computer. If you're into meme culture or Twitter, you'll often hear central bank digital currencies or government cryptos referred to as FedCoins, as in the Federal Reserve. Now, this is no longer just a speculation. This is something that's definitely coming, and I'm going to show you in this video why it's coming and how you can protect yourself from it. China is working on their new cryptocurrency, and all the other central banks are working together. Central banks of Britain, Japan, Sweden, Switzerland. US is obviously working on it as well. Now, why would a government, in particular the US government, want to have a government crypto? Well, the reasons for a central bank digital currency, there's some really cool things that they can do, very cool and evil things. So for example, if you had a cryptocurrency as your government currency, you could program taxes directly into the money because it's really money as software. So you never need to file your tax returns again. The government would just, when you made a purchase, the government would take out sales tax. When you earn some money, the government would take out federal tax or state income tax. And so this would really streamline things, and it would enable the government to get its hands on your money very quickly. And there'd be no more tax cheating, at least at a surface level, because the government could just harvest its taxes directly. Second benefit, it would make it really easy to send out money, to dump helicopter money on the people. It's looked like the U.S. government had a lot of trouble getting those $1,200 checks out a couple weeks ago, and this would make it really easy to send what are called UBI checks, or universal basic income. It looks like the U.S. is very quickly moving towards this sort of socialist thing where they print money and distribute it to the populace in order to keep people from rioting, in order to keep people who have been lost their jobs or are stuck at home due to the coronavirus. So it would enable the collection of taxes and also the distribution of UBI, universal basic income, so a couple $1,000s per family every month. And I think the third benefit, it's really not a benefit for the people, it's a benefit for the government, would be that they would be able to program negative interest rates directly into the money. Now, you've probably heard that in Japan and in most of Europe, in the Eurozone, banks offer negative interest rates. So in the U.S., you can earn maybe 1%, 1.5% if you're lucky in a savings account. In Germany now, all of the government securities, all the government debt, and many of the savings accounts are now negative. So if we look here, we can see that if we buy a German government bond, a 2-year bond, we will lose about 0.8% every year. And all the way out, the 5-year bonds, the 10-year bonds, and the 30-year bonds. They're called Bunds in Germany, but it's the same principle. They all have negative interest rates. And so what this means is that if you put in $100 into one of these 2-year bonds, a year later, instead of making interest, you're actually having money, you're having your principal depreciated or devalued. And so after 1 year, you will just have, that should be $99.20. So you'll lose about 80 cents. And obviously, if you have millions of dollars in the bank, or no matter what amount you have, this could become very annoying. And this is what happens when you enter the end of a fiat currency regime and things begin to break down. You see things like negative interest rates. You also see what are called bail-ins. This happened in Cyprus in 2013, where if you had money in a savings account in a bank in Cyprus, they did what's actually called a bail-in, where they confiscated money. They actually took money out of your savings account. So if you had more, I think it was limited to accounts over 100,000 euros. But if you had anything above 100,000 euros in your Cyprus bank account, all of a sudden they would just take 47% of that and just take it and it would be gone. And obviously you have no recourse. That's why a lot of people tried to move their money out of Cyprus. But this could happen. It's happening in Germany with negative interest rates, and it's happening in various sort of more fringe countries in terms of bail-ins or outright confiscation of savings. Now, why is this going to happen in the US as well? Well, it's pretty clear if we look at the debt situation. So here's the famous US debt clock. And I'm going to go through this really quickly, and I ask you to bear with me. This might seem boring on the surface, but it's actually really interesting when you understand the cogs and wheels and how this actually works. So US federal government spending, the spending that's approved by Congress, currently spending about $6 trillion a year. But we have a problem because in terms of taxes, we only bring in about $3.5 trillion. Obviously, that number is going to go way down. A lot of it's driven by capital gains tax and incentive options, and that's going way down now because the stock market's down. And so when you take this the spending minus the revenue, you end up with what's called the budget deficit. And we currently have about a $2.5 trillion budget deficit. This can only go up. So how do you spend $6 trillion when you're only making $3.5 trillion? Well, you have to issue debt, and you have to issue a lot of debt. Right now, these are called United States Treasury securities, treasuries. It's the federal government's debt, and so basically the Treasury sells this debt to investors, collects the cash, and gives it to Congress to spend on boondoggle projects and bombs and all this crazy stuff. Now, it's even crazier than that because what is happening is you have one arm of the government that's issuing debt, issuing treasuries, selling them. Then you have another arm of the government, the Federal Reserve, that's buying this debt. Now, a lot of people will say the Federal Reserve is not part of the government. I consider that just really a semantic argument. It functions like part of the government. Maybe it's just the head bank and it's run by a cabal of bankers, etc. But for all intents and purposes, the Fed, our central bank, acts like a part of the government. So you have this weird situation where we have to finance the budget deficit. One piece of the government sells treasuries. The other piece of the government prints money and buys these treasuries. And so you have basically one hand taking money out of one pocket in order to put it into another pocket. And these treasuries, once they're bought, they're held on the Federal Reserve's balance sheet, which you can see here. In the early 2000s, it used to be below $1 trillion in terms of assets that they're holding on their balance sheet. It's been just gone vertical. Looks like a momentum stock since coronavirus hit, and we're now somewhere around 6.6 trillion. So the Treasury issues these securities, gets cash for them, gives it to Congress, and the Federal Reserve buys these securities. Now, where does the Fed get the money to buy these treasuries? Well, it's very easy. It just prints it. This meme, they said it was forgery, so we renamed it quantitative easing. Quantitative easing just means printing new money. Obviously, this is all done digitally now. They're not actually, my daughter was concerned that they were going to use up all the trees in the world printing more US dollars when I was talking about it, which is a cute point. But obviously, this is created on computers at the touch of a button. One of the problems with having a fiat currency and a digital currency. And so what they do is the Fed, which supposedly, if you read their website, the Federal Reserve, the central bank of the United States, provides the nation with a safe, flexible, and stable monetary and financial system. Well, if you've been following market history since 2000, the U.S. financial system is anything but stable. We've had crisis after crisis after crisis. We had one in 2000, had one in 2008, and now we're having one in 2020. And they keep getting bigger and more difficult to solve. So the Fed prints money. They call it quantitative easing, so you don't really know what's going on. Here's another one, printing money bad, quantitative easing. So they print money out of nowhere, and they use it to buy U.S. treasuries. Here's an inside look at the Federal Reserve, where they're actually printing money. Chairman Powell. It's some very rare footage we're seeing here. Now, why would they? Why does the Federal Reserve need to buy treasuries? Need to buy this government debt? Well, they need to buy it because if you issue a lot of debt, it crowds out the market and it basically makes interest rates go up. If we go back to our debt clock here, we can see that the total U.S. debt, so the total federal debt, the U.S. government debt is about 25 trillion. But then when you add in personal debt, credit card debt, student loan debt, etc., you come out to about 77 trillion in total U.S. debt. And I think it's worse than that. I'm trying to, I think if you add in all the unfunded liabilities, Social Security, there's really no money in the Social Security fund. There's just an IOU. Medicare, so Social Security is about 20 trillion, Medicare 32 trillion. And so if you add that to the total U.S. debt, you end up with about 147 trillion in total debt. This is the unfunded liability. So this may be in addition to the 77. Either way, it doesn't really matter for my point. The reason the Fed, the central bank, has to buy these treasuries is otherwise interest rates will go up. Well, what happens if interest rates go up? Let's just do a quick back of the envelope calculation. Right now, we have 77 trillion in total debt. I think this is not counting Social Security and Medicare. This is just counting personal debt and federal debt and state debt, including all the auto loan debt, mortgages, student loan debt, etc. So let's just go with the 77 trillion number because it makes the point. If interest rates go up 1%, the interest expense, the expense that the government has to pay, or all these people who have the debt have to pay, goes up by 1%, which would be 770 billion. Interest expense will go up by 770 billion if interest rates go up by 1%. Now the Fed is buying treasuries, so interest rates stay low. Now, what is the 770 billion? What does that look like? Well, U.S. GDP, basically all our production of goods and services, is about 21 trillion now. And so if you measure this amount of increased interest expense in terms of GDP, it would imply a 3.67% drop in GDP. Now, we're obviously getting a much bigger drop in GDP right now simply because of the shutdown surrounding the virus. But if we take an example like the Great Financial Crisis of 2007 to 2009, which was extremely severe, it was more of a banking crisis than anything else, GDP went down 3.25%. So this is, if we were to see a 3.67% drop in GDP, that's a severe contraction in the U.S. economy. It basically puts you in recession. This is why interest rates can never go up again in the U.S. And so what they're going to do is they're going to keep monetizing the debt. They're going to keep printing money and using it to buy treasuries. And this will keep interest rates low, and I expect interest rates to go to zero in the U.S. and possibly to go negative, as they've done in Germany. And we could even see these sort of confiscations of savings by the federal government. This probably won't happen in the U.S. Instead, what's going to happen is they're going to devalue the dollar by printing more of it. The more dollars you print, the less each dollar is worth. But this is the path we're on simply because of our fiat currency system, our out-of-control government spending, our accumulation of debt over the last 50 years. So interest rates cannot go up. Federal Reserve has to keep printing money and buying treasuries. And as a result, there is going to be a run on the banking system. People do not want negative interest rates in their bank account. People do not want their hard-earned savings that they've already paid taxes on confiscated by the banks, by the federal government, or by anyone else. And so that's why this FedCoin, the central bank digital currency, is going to be a very, very evil thing. And what it's going to mean is that you're not going to be able to take your money out of the bank because these negative interest rates are going to be programmed right into the money. So you can take it out of the bank, but you're still going to be, if you have $100, because of the way the money's going to be programmed by the government, maybe the next year you'll have $99, and the next year you'll have $98. And so there'll be this sort of ongoing confiscation. This is what the FedCoin makes possible. This is what the central bank digital currency makes possible. And it prevents a run on the banking system. And because either way, you're going to be paying negative interest rates. So I always laugh when people say, well, aren't you worried that the FedCoin is coming out? The Fed coin is going to be very unpopular. I plan on using it as little as possible. Maybe I'll use it to buy groceries. You'll obviously have to use it to pay your taxes. But what smart people are going to do is they're going to keep their money outside of the system. No one would ever keep their money in a Fed coin if it has negative interest rates. So what they're going to do is they're going to put their money in real estate, which is much harder for the government to devalue. They're going to put their money in gold, physical gold, in their basement. And they're going to put their money in Bitcoin as well. And this is sort of the punchline. People always say that whatever I'm talking about, it ends up with Bitcoin. But there are very structural reasons for this. Negative interest rates and the formation of a government currency, a government cryptocurrency, are going to onboard a lot more people into the idea of crypto. It's going to legitimize it. And pretty soon you will have your Fed coin on your phone. You'll be able to spend with it. There'll be no more cash, which will make it very difficult for privacy, also make it difficult for illegal activities. But once you have a button on your phone that you basically have cash on your phone in terms of a government crypto, it's going to seem very natural to also have different kinds of cryptocurrencies on there, in particular Bitcoin. Now, there's no real advantage to a Fed coin. It's going to be very evil. It's going to be a way of confiscating wealth, and it's not going to be limited in quantity. This is the U.S. money supply, the M2 money stock. And you can see that it just goes up and up and up over time. It's really gone up. It's gotten much steeper in the last couple of months as the government, as the central bank prints more money. Now, if you contrast that with, this is very similar to something that happened in Zimbabwe. They printed a lot of money. They ended up having these $100 trillion bills, Zimbabwe dollars, and even one of these wouldn't buy you a loaf of bread. So we're not headed there tomorrow, but this is the path of fiat currencies, this is the path of money printing. And so the Fed coin will have unlimited supply. It will not be a good store of value for this reason. It will constantly be losing money over time, losing purchasing power over time. And so a hamburger that costs $5 today will cost $50 in 20 or 30 years. Now, if you contrast this increase in the money stock with Bitcoin, there are only 21 million coins. It's it's the scarcest asset in the universe, and it's the lead crypto. It's going to be a very good place to hide out from the Fed coin, from the government crypto. And right now it only has a market cap of 140, 150 billion. As more and more people put their money into it, that market cap is going to go up and up and up until it rivals the market cap of gold, which is about 10 or 11 trillion right now. And it'll just be, I think that having a government crypto or central bank digital currency is really going to legitimize crypto. It's going to make it much more mainstream, and it's going to increase the adoption of it. And so I think certainly the Fed coin or government crypto is not going to be a competitor to Bitcoin. It's going to be, Bitcoin doesn't confiscate your savings. Bitcoin's not going to have negative interest rates. Instead, it's just going to continue to appreciate as the U.S. money supply increases and devalues the dollar. That will innately make the price of Bitcoin go up, as well increased adoption. Now there's a whole, this is just a picture here of how you can buy Bitcoin on your phone. When everyone already has the Fed coin on their phone, it's going to seem much more natural to also have a little bit of Bitcoin. So what we're seeing is just going to be huge individual flows into Bitcoin, huge institutional money manager flows into Bitcoin, high net worth investors, millionaires and billionaires, moving into Bitcoin to preserve their wealth and avoid the evil Fed coin, the government crypto. Now, there's a separate question that will arise, which I already covered in a video, which is that can the government shut down Bitcoin? Can it ban it? And so I go into a lot of the game theory surrounding that in this video, which I'll link to. Can the government shut down Bitcoin? I'll link in the description notes below. And I'll also link to my introduction to Bitcoin for those who are interested in figuring out a way to protect their wealth and their future savings from government confiscation. So if you found this video helpful, please hit that subscribe and like button, and let me know your questions and comments in the comment section below. If anything wasn't clear, you'd like me to elaborate in a further video, you can let me know that as well. Hope you're all staying well, and I'll see you in the next video.